Hey guys, welcome to the Masterclass. This is the General. Today we're looking at an accounting question from November 2023, and we're going to be doing question number 1, company financial statements. So in this paper, it carries the most marks. It happens to have 55 marks. Then we come to the question itself. Before we go in, I'd like to thank all of you for subscribing and to encourage those who have not subscribed to do so you can help the channel to grow. Now, question number 1 is financial statements, and it is saying the information is Buhle Limited. The information relates to the financial year ended on 28 February 2023. The business sells bicycles. So required to refer to information B2. Calculate the value of closing stock of bicycles using the FIFO method. Then complete the statement of comprehensive income as well as the statement of financial position. Some amounts are provided in the answer book. Figures are not required in the shaded areas. Okay. Then we have our information A, all the balances there. Just to note, there are a few that are not given, those with question marks, so the information will be given in adjustments for what we should do with them. However, I would like us to start. So the first one says refer to information B, Roman numeral 2. So let's start there, right here. The following information was obtained after the physical stock count. The first in, first out method is used to value the stock of bicycles. So we have the purchases for the year. We have 3 months, June, September, as well as January. So we have 3 batches that were bought, and under first in, first out, we work backwards because we assume the June is the first one to be sold, followed by September, followed by January. So if we have any stock at the end, it means it must be from the January batch. If the January batch has been satisfied in terms of the number, then we go to the September batch backwards. So there were 1,009 bicycles on hand on 28 Feb. 40 bicycles purchased in January 2023, which is the last batch, were returned to the supplier due to factory faults identified. So we no longer have these bicycles. So it's no longer 740. It's now 700 after taking out the 40. Then a number of bicycles, which is not known at this time, were stolen and must be recorded as a loss. So that loss, what do we call it? Trading stock deficit, which is going to be an expense. What do we mean? I will explain later. All right, let's go into our question. So let's start here by saying we want to build 1,009 units. Then we are starting to build that with the batch of 740, this one, minus the 40, and then the price is 2,100. So the first batch will be 740 minus 40 times 2,100. That's the first batch, but we're not done because this has only given us 700 here. So we still have to say 1,009 minus the 700, which will give us 309 times the second batch was at 2020. So we multiply, then what we get here and what we get here, we are going to add. So when we punch all of that into our calculator, what are we going to get? Let's punch that. We get 2,094,180. All right, so this is the value of the closing stock that we've been given. All right, let's move on. So let's go to our statement of comprehensive income now. So we've got the sales figure is already given. Now the cost of sales is not given. So let's go and see. Adjustment number 1, the business uses a markup of 120% on cost of bicycles. Trade discounts totaling 336 have been granted and recorded. So this has already been done. So let's see what that means in actual effect. So it means this amount was not 21,000 before. It was this 21 million, it was this 21 million before, plus the 336,000, which was then taken out. So the adjustment was already done here. So that's what they mean by trade discounts totaling 336,000 have been granted and recorded. So that money was supposed to be received as part of our sales, but it was given as a discount to some customers. So when we are doing our cost of sales here, we are going to come and say, let's add back that amount, 21 million, and 17,200. Then we add 336,000 back in order to find out what was the original. Then we also know what is the relationship between our sales and our cost of sales. So we know cost of sales is where everything starts. It's 100%. Markup is, in this case, it was 120% that we were given, and then our sales will then be a result of the two, which is 220%. So the relationship of these two will always be such that if we are to find cost of sales, our fraction will always be 100 over, in this case, it will be 220, because cost of sales always represents 100. So we are going to come here and say times 100 over 120. Then what will be our answer? We punch that into our calculator. We get 9,706,000, like that. And this amount must always be in brackets, because sales minus cost of sales is what gives us gross profit. Then when we subtract this minus that in our calculator, we get 311,200. Okay, so now we have our gross profit. Our other income, which is the next segment, is already given in our answer book. Bad debts recovered and sundry income are blocked, meaning we don't have to do them, but we have to assume that they are there. So whatever amounts we are getting here will have to be added by these amounts that we don't know to give us this. So we can't just add this and this and expect to get this amount. That's the effect of the shaded boxes. But however, let's go into what we need to do. So let's find out what is going to come here. Let's go back. So we have done this. Then we come to number 3. Commission income 41,000 is owed to the business. So this is income. This is where we are going. So we come here. We are going to put our commission income over here. Our commission income, how much are we given? So we must always start by writing the figure that we are given. We get a mark for that. So how much is given for commission income? 277,000. We come and put it here. 277,000. Then what is the effect of this amount that is still being owed? Remember, in the statement of comprehensive income, we are using the accruals concept. Accruals concept tells us that we are basically supposed to record what was supposed to happen, not exactly what happened. So it means the 277 that we received is what actually happened, but that's not what was supposed to happen. So in the financial statements, always remember, guys, we are recording what is supposed to happen. So we have to correct that. We are going to come and add however much was not done. 41,000 is still owed to the business. So we come here and we add 41,000. What do we get? We add that together in our calculator. We get 318,000. All right. Now, before we move on, this amount, what is it going to affect next? I want us to keep an eye on it, because if this money is being owed to the business, it is going to affect trade and other receivables later. Okay. Let's look at the next one. Fee income includes 47,150 for February and March 2023. When is our year ending, guys? Our year is ending on 28 February. Okay. So we are told here that the fee income that we see here, 303,000. We have to start with it here. We come here, we write fee income. Okay. How much is it again? Sorry, that just skipped my mind there. 303,000. Okay. We come, we write our 303,000 over here. Then what happened? There are 2 months that we are being told about, which are February and March. Let's read it again. Fee income includes 47,150 for February and March. There is February and March. Now, note fee income increased by 5% on 1 March, meaning that this 47,150 has 2 months inside. February at 100%, which means there is no, that's before the change. March will now be at 105% because there is now 5% on top. So it means altogether this is 205%. So we are asking ourselves, our year ends on 28 February 2023. So we don't want this March figure, because it's not part of our year. We need to take it out. How do we take it out? It is 105 out of the 205. So what are we going to do? We are going to come here and say our fee income is here. So let's use a big bracket here. And then we say minus small bracket. We say the 47,150, which is for 2 months. We want to take out the 105 so that we are left with the 100, which is going to leave us with our year complete. Because remember, we don't want 13 months, we want 12 months. That is going to give us a figure of 278,850. I hope we're still together, guys. All right. Then from there, we know that the figure is already given here. The figures are done. This one is there, this one is there, this one is there. So we are going for our operating expenses. Okay, before we continue, that fee income there, what is happening? There is a prepaid income there. There is money, fee income that we received for March, which is a month that is not included in our year. So that means there is trade and other payables there. Let's put a note on it. This will go to trade and other payables later in the balance sheet. So we need to check these things so that we come back to them. All right. Let's go to the next one. So where are we now? We are in operating expenses, salaries and wages, depreciation, salary expenses. They are blocked. So let's go and find the rest of them. So we continue with our adjustments. We are now at adjustment number 5. Buhle Limited rents 150 square meters of space from Prime Storage at a monthly amount of 330 per square meter from 1 May 2022, which is in the middle of our year. The company increased the space rented by 25 square meters on 1 November 2022, meaning during the year, at some point, they now increased the space. Rent was paid until 30 April 2023, yet our year is ending 28 Feb. So there are two things here. There was a change in the rent during the year, combined with also an adjustment here where there is a prepaid expense. Rent was paid in advance. So let's go back a little bit and try to understand what happened. So we have the period of 1 May 2022 to 1 November it says to 1 November, which means 31 October, because November is not counted. That's a period of 6 months. So for 6 months, how much rent are we paying? We are paying for 150 square meters times 330. No problem. Then what happens after that? From November, so it's going to be November, December, January, and February, which is 4 months. So we are going to have another 4 months to end our year. But this time, we are now having the 150 square meters plus the 25, which is 175 times 330. So if we add all of this together, that's going to give us the 10 months which fall into our year. Because when we count from 1 May to 28 February, it gives us 8 months. May, June, July, August, September, October, November, December, January, February. So we need 10 months. So it's the 6 months to November and then the 4 months which end up there. So we are just going to go direct and find out what is our amount. So if we multiply, let's take our calculation and put it here. So we are going to write our rent expense we are going to say the first amount is how much? Is the 6 times 150 times 330. That's for the first 6 months. Then the other 4 months, what do we have? We've got, this time it's now 175 times the 330. So we are going to add these two. That's what will give us our amount. And if we punch that, all of that into the calculator, we are going to get 528,000. However, I want you to remember that there are 2 months because the rent was paid up until when? Let's read it again. Rent was paid up until 30 April. So after February, we've got March and we've got April, which is 2 months that have been prepaid. So that is going to affect which note in our balance sheet. This is a prepaid expense. It is going to affect us in terms of trade and other receivables. We'll come to it later and I'll explain why. All right, let's move on to the next one. We are now at number 6. Provide for the director's fees owed. The company's two directors, Brenda and Johan, have been employed since 2020. Brenda earns 10,000 per month more than Johan, but she has not been paid for February 2023 yet. So this means this person has been paid for 11 months. Okay. Johan took unpaid leave. So this one we don't have to worry. It's unpaid leave for the last 3 months of the year. So this one worked 9 months. Okay. Let's go and find out how much is the director's fees here. The director's fees that we have is 1,610,000. Okay. We come here. We say director's fees. We've got the 1,610,000. That's our first figure that we are given. Then we want to know, out of these two, what is supposed to happen? What do we have to correct? This one, Johan took unpaid leave for the last 3 months of the financial year. So he is fine, this one. No problem. This one has not been paid for February. So there is 1 month missing here. But how are we going to find out this month? Because we are told they are not earning the same. So it means that figure of, okay, let me create some space here. Let me create some space for us so we can calculate. Okay. So we have done this one. Now we are saying the 1,610,000 that we are given. How is it shared? There is someone with 11 months. There is someone with 11 months and there is someone with 9 months. So there is a total of 20 months. So let's deal with this person first, because we are trying to avoid a situation where we make an equation. Because once we bring in X, a lot of people become discouraged. So let's avoid creating a mathematical equation. Let us let's subtract this additional factor. So Brenda earns 10,000 per month more than Johan, but she has not been paid. So he has been paid an extra 10,000 for 11 months. Let's subtract it and see. So 11 times 10 will give us 110,000. We subtract it from there. We are left with 1.5 million. Now, so after we have taken out the 10,000 per month that Brenda is earning more, it means now they should be earning equally. So how many months are they earning equally? 11 months and 9 months. So we divide this by 20. What do we get? We divide it by 20, we get 75,000. So each one will be getting 75,000 if we are not looking at the increase. So that means Johan is earning 75,000. Then Brenda will now take 75,000 plus the 10,000. So Brenda is earning 85,000. I don't know if you got that. I'll just repeat it. So the figure we are given is 1,610,000. We are told that Brenda earns 10,000 more than Johan. So what we are going to do is we take out the part that Brenda earns more, which is the 10,000 per month for the 11 months that he has been paid. So 11 times 10 is 110,000. We take it out, we get 1,500,000. We divide that by the 11 plus 9 months, which is 20, to find out how much is each one of them getting before we have put the 10,000 of the other one. So we get 75,000. So we can conclude that Johan, who earns less, is earning 75,000. Then when we add that 10,000 back to Brenda, who is earning more, Brenda will be earning 85,000. So what do we need to sort out? This one is fine because it's unpaid leave. Brenda is the one, but she has not been paid for February. So we need to go and pay Brenda. So we come here. Remember, I said we need to do what is supposed to happen. We are supposed to record what is supposed to happen, not what actually happened. That's our cross concept. So we come here and we are going to add 85,000. So you can just break it down by saying, in fact, we can write 85,000 here because I have something to tell you. According to the marking guidelines, let's add that figure there while we are talking. 1,695,000. According to the marking principles, guys, you will be shocked to find out that the marker is supposed to mark the answers in the end columns here. This is what we mark. If the answer is correct, if there is 4 marks, you are going to be given all the 4 marks here. It's only when the answer is wrong that we start to look at the part marks so that we give you for what you have done. But once the answer is correct, we don't look back. So you shouldn't be worried too much about what you write this side. As long as your answer is correct, you will be fine. However, you need to show as much as you can. All right. Let us go back. So we have done director's fees. Now, remember these boxes, they actually tell you what is happening. If you remember very well, I said there was something we were supposed to come back to, and that was our trading stock deficit. How do we know our trading stock deficit? Our trading stock deficit is right here. How do we know the trading stock deficit? We calculated a trading stock, this one, 2,094,180. Then if we come to the information, we have another trading stock that is given here. What is that one? It is 2,125,380. So what is happening here? This is the trading stock that is recorded. That's what we are supposed to have. But when we actually did a physical stock count, we discovered that no, we only have how much? 2 million. So where is the difference? That is the deficit. That is the stock that was being talked about here. A number of bicycles were stolen. It must be recorded as a loss. That loss is what we call the trading stock deficit. So we come here, we record that and say trading stock deficit. So we count that as a loss. What about if we had a trading stock surplus? If we found out that we have more than we actually thought, that would have counted as an income. It would have gone into other income. So now that it's a loss, it's trading stock deficit. And how do we know the trading stock deficit? We are going to subtract the figures. The one that we are given, 2,125,380. This one. The one we are given in the adjustments, in the information. This one. 2,125,380. We subtract what we calculated to be the one, which is 2,094,180. 2,094,180. We subtract that. What do we get? We get 31,200. Now that completes our income statement. We are left with operating expenses, which would then be a balancing figure. What are we subtracting? We are subtracting this figure and this figure. So if we subtract 12 million 224,100 minus 4,150,300, we get a balancing figure of 8,103,800. So this one is a balancing figure. Why is it a balancing figure? Because anyway, remember, this space is blocked. We were supposed to add everything that is in the box and get the answer here. But we cannot do that now, because even though these ones are blocked, they are actually there. They have figures, but we just don't have the figures. So we can't say simply add what we have and write it there. So what we are going to do is, since we have the gross operating income and we have the operating profit, if we do the reverse, this minus this, we are going to get this, because under normal circumstances, gross operating income minus operating expenses was going to give us our operating profit. So now we do the reverse and the answer is still correct. So once you have done this, you have done your whole income statement, because the other parts are done. However, I want us to note something. We've got this income tax here. What is this income tax? This is the income tax that is supposed to be paid. Remember, I said that all these entries are what is supposed to be paid. Now, we have another income tax here. SARS income tax, provisional tax payments. So that amount is not the same. So provisional tax payments are the payments we pay on a regular basis before the year end. Then when we are told how much we are supposed to pay, then we are going to rectify the balance. So let's go to our balance sheet now, because some of those things are still going to apply. So some of the working we did is already going to help us here. So let's start with the information that we have already done. Let's try to use it as much as possible. So this area is blocked. We're not going to be able to go any further. Okay, but we've got investment. Let's find out what are we saying about investment. All right, there we go. So we have dealt with this. Okay, let's come and deal with this. The company has invested in 3 fixed deposits of equal value. One of the fixed deposits will mature on 31 May 2023. Where are we? We are supposed to end on 28 Feb. So when our year ends on 28 Feb, how many months are left to 31 May? We are left with March, April, May, which means it is still within the next 12 months. So what is happening is this part, which is going to mature in 3 months, cannot continue to exist under investment non-current assets here, because it is now a short-term component. So what we are going to do is, from the investment fixed deposit that we are given, let's go back to our information. Fixed deposit, we've got 1.5 million. So we come here, we say, all right, from the 1.5 million that we have here, 1.5 million, not all of it is still a fixed deposit. Not all of it is still a non-current asset, because the other one, which is let's go back. The company has invested in 3 fixed deposits of equal value. One of the fixed deposits will mature on 31 May. So it means that 1.5 million is 3, which are equal 500,000, 500,000, 500,000. So one of them, which is 500,000, is maturing. So we'll be left with 1 million. So what happens to that 500,000? That same 500,000, we are going to put it here under cash and cash equivalents. Okay. Okay, I'm writing it as number 3 just for the sake of order. Remember, here is ITC, so for the sake of order. So let's just do our cash and cash equivalents, so we are done with it. Cash and cash equivalents is given here. Now you may not see where it's written cash and cash equivalents. How do we know which one is our cash and cash equivalents? We look for this amount, bank. So if we have bank, if we have cash and any other form of petty cash, that's what we call cash and cash equivalents. So we take the 629, we put it here. That's where we start, 629,000. Then we are going to add this element. We said it is no longer non-current, it is now current. So it's no longer counted in non-current here, it is now counted here. So we add that. What are we going to get? We get 1,129,000. Okay, let's go to our I, which is our inventories. Our inventories, fortunately, we've already calculated it. Let's go back and check what we did in number 1, 2 million. This is the one we calculated. This is the actual. So we don't take the one that is here, because remember we said there was a problem with this figure here. This is not the one that we have. There is a deficit which we recorded. The trading stock deficit, we recorded it as one of our expenses here. We recorded the loss of that information, of that bicycle, sorry. Then we come here, we say, okay, so the inventories, the correct one is how much? We just take from what we already calculated, and we are going to be given a mark for that. Now this mark is a method mark, which means you're going to just be given for transferring whatever figure you had. If your figure was different, as long as you bring it correctly from what it was and you bring it here, you are going to receive a mark. Then here we complete our current assets with trade and other receivables. Okay, now trade and other receivables starts with debtors control. So let's go and pick our debtors control. How much is our debtors control here? Debtors control 483,110. Okay, come here, we put 483,110. Then remember, there are some stars that I put there. Let's go back. When I told you that this is going to affect us later on, I said our fee income, okay, commission income. Let's start with commission income, the trade and other receivables. Commission income 41,000 is owed to the business, so this is also like our debtors, so we have to add it to our debtors, trade and other receivables. We come here, we say on top of these debtors that we have, remember we also have someone who's owing us 41,000 in the form of fee income. We bring it there. All right, let's see another adjustment that we have done again. Is there another thing that is going to trade and other receivables? Yes, rent expense. Remember, rent was paid until 30 April when we are supposed to end at 28 Feb. So I said there is March and April, which is a 2-month payment of expenses in advance. So what does it mean when we pay expenses in advance? It becomes an advantage to us, because when the time comes for us to pay, we no longer have to pay. So we have paid in advance, so we are expecting to pay for March and for April, and then we're like, oh, we already paid. So that becomes an advantage to us. So it goes under trade and other receivables, and we are saying it is how much? 2 months of the new rent. Okay, so what is that new rent that they will pay? All right, we come here, we say, remember, how much was the rent? initially they were paying, it was 150, then they added 25, which makes it 175 times the 330 rand, and that will be multiplied by 2 because it's 2 months. So that is the figure that we are trying to calculate. So you do not have to actually bring all the calculations in there like I told you. So you can just bring the figure there, which is 115,500. That right there is our prepaid expenses. Okay, 115,500. All right, now is there anything else? So we have taken into account all our, let's check again. So we go back and tick them. So this one we have used it, this one we have used it, this one is trade and other payables. So we'll go back and use it when we get there. All right, so we are done. Let's just check. There is this one here. Transfer a debtor's debit balance of 2,700 from the debtor's ledger to his account in the creditor's ledger. What does this mean? So there are such people that are owing us money while we also in another capacity owe them money. So in other words, this person is a debtor and also a creditor to us. So we are saying here, instead of actually paying him the money, let's cancel this money, transfer the debtor's debit balance. Okay, so this person is owing us some money. Sorry, he's owing us 2,700, but because we are owing him, instead of paying him the 2,700, let's cancel it out. Let's offset it against the money that we are owing him as our creditor. So we have to take this money out of debtor's control. We have to take it out. So what are we going to do? We go down, we say, all right, we have done all our other adjustments. And then we are going to take that amount out, minus 2,700. We close. So we punch all of that into our calculator. 483 plus 41 plus 115 minus 2,700. We get 636,910. Okay, right. Let me just remove this for us, so that we work with a cleaner space. All right, so what is next? We are done with this part. So we can add our current assets. So we add we add 1, 2, 3. What do we get? We punch that into our calculator. Then altogether it gives us 3,860,090. That's for current assets. All right, so we have done the one section with the asset section. Now we're going to the equity and liabilities section. So we have to work with what we are given. So some of the areas are blocked. Okay, we come to this area and say, what do we know? So let's go on and read our adjustments. Remember what I was telling you, an amount for tax is still owed to SARS on 28 Feb. How much is owed to SARS? It's going to be the difference between the tax that was actually paid. So there is the SARS income tax, this one, versus the one that was actually paid in the income statement, this one. So the difference between the two is what is being owed. Which one is bigger? So the income tax that we are supposed to pay is bigger than what we actually paid. So it means we are owing SARS. So that is trade and other payables. So we come to, let's just start with it, because you can start anyway. So our trade and other payables start with creditors control. What is our creditors control amount? 523,890. 523,890. We come here, we write 523,890. Then we come and add this difference here. What is that difference? Okay, let's put it here. SARS income tax. Okay, so if we have enough space, we don't have to put it in trade and other payables. We can put it separately. So let's put it here. SARS income tax. Now, how much are we supposed to pay according to our income tax, our income statement? It's this amount, 1,152,000. We subtract 1,049,000 out of that. What do we get? 103,000. Okay, good. Then from there, let's continue with our trade and other payables. Okay, maybe let's end with that, because there's another easy one here. Let's read some more. We've got dividends. Interim dividends paid is 990,000. So the dividends that you see here, dividends on ordinary shares, this one is the paid one. Okay, so it doesn't have anything to do with balance sheet. What about this one? Final dividends due. This one, it means that these are final dividends. They have been declared, but they have not yet been paid. So when are they going to be paid? In the next 12 months. So this becomes shareholders for dividends. We are owing our shareholders this amount. We come here, we say shareholders for dividends. How much is that? 2,640,000. We take it as is. All right. Now let's go back to trade and other payables. Remember, I told you there were some things that we left hanging there. So we've got, where is our trade and other payables? We've got this one, the fee income. So we took out that fee income of 105%. The 105% that we took out, how much was it? That was an amount, if you calculate it, let's go back to where we did it, right there. So if we calculate this amount that we took out, that was extra paid, that's the same amount that we are taking there. So when we calculate that amount in our calculator, what do we get? 24,150. So we come and add it here. So you have to be careful of adjustments that you do in the income statement that also affect the balance sheet. So we also have directors' fees. Remember, in our directors' fees, we said we are owing what? This person, the director, has not been paid 85,000. He was paid for 11 months. So we come and put it here that in the next 12 months, we are going to have to pay someone 85,000. Then remember, there is this 2,700 that we took out of trade and other receivables, and we said it is supposed to be offset against the creditor. So this creditor, we were owing them whatever amount. We have to subtract 2.7 now, their credit that we have transferred. So we have to reduce our trade and other payables by that 2,700 so that we can cover with the debtors, with the balance that we were owing them. So all those figures now, 1, 2, 3, 4, give us our trade and other payables. We add, what do we get? we get 630,340. Great. Now what do? We come here and add, because the box is full and there is nothing blocked, so we add 1, 2, 3, 4. We add all of that. Let's punch that into our calculator. We get a total of 3,793,340. Okay, all right. Then we are left with just a small detail here. All right, I think let's check if all our adjustments are done. There is one more, the last adjustment. The debt equity ratio on 28 February 2023 is 0.2:1. So remember, what is our debt equity ratio? Debt is non-current liabilities. What is our equity? It's shareholders' equity. So it means it's 0.2:1. So if we have one of these two figures, we can find the other one. Okay, let's go and see. What do we have here? Oh yes, we have this one, the non-current liabilities, which is 0.2. So this one, which is the shareholders equity, is going to be 1. So to move from 0.2 to 1, we multiply by 5. So multiply this by 5, this figure. What do we get? We punch that into our calculator, times 5. We get 22,562,750. Correct. Then from there, we are left with something here, retained income. Remember, we don't have any information on retained income. On this side, it was also given as a question mark. So the ordinary share capital is already inserted. The 9, we don't have to use this one. So we have used all the information that we have. So this is probably going to be a balancing figure. Let's see. Yes, because this box, when we add ordinary share capital plus retained income, it gives us this. So now that we have the two, we can do the reverse. So 22,562,750 minus 20 million, we get our retained income, which is a balancing figure of 2,562,750. So just like that, guys, we have come to the end of this lesson. Thank you so much. Please continue to subscribe. Remember to like, comment, share, and press the notification button. Now, if you want to know more about the upcoming exams in business studies, you better watch this video. I've did 7 tips that can help you to get a distinction. Thank you. See you in the next one.